So if you're like me, you find it really, really easy to just hate day trading. Everything about it. From the people that day trade, to the videos, to the scams, to the fact that nobody really wins when they day trade, it becomes very, very easy. But with most things in life, I realize, A, it's really hard to criticize something if you've really never done it, like really gave it an honest go. And two, there's been tons of stuff in my life that I once hated that I now love. I don't know, like girls, whiskey, even trading simple options in the wheel strategy, I thought was the most risky thing ever. So at the beginning of this year, I said to myself, I'm going to give it an honest go. I'm either going to blow up an account, I'm going to put some money on the side. I'm going to say this is strictly going to be day trading money. If I lose it, let's see what it's all about. So at the end, I can then at least say that I'm giving criticism from actually trying it. And that's what I want to talk about in this video. Really the 5 or 6 things that I've learned, the results that I had in the first 3 months, and what I want to do moving forward. Because like I said, if you're going to criticize things, and I get criticized all the time, and that's fine, right? We should criticize and question one another. But if you're going to do it, please make sure that you at least have some data or some experience to back it up, not just news articles and conversations that you overheard people having at the water cooler. And let it be known, this is also not a promotion for day trading. I'm still on the fence, right? I'm 3 months in. I want to try and get to a year if I don't lose all my money. And we'll talk about exactly how much I'm down or up in just one second. The first thing that I really, really learned over the last 3 months is that day trading can be gambling or not. Everybody thinks about the gambling side of things, and not many people think about the risk to reward side of things. Like, yeah, you can wake up in the morning, think that a stock is going to go up that day, buy an option, wait till the end of the day, see what happens, and then sell it at the end of the day or lose your money. Yeah, that's gambling. That's the same as throwing a poker chip onto a table. But there are a lot of people out there that have a strategy that has been working for them for some time. I don't know how long that time is, but I realize that you definitely can manage your risk to reward to pull things into your favor if you are consistent. And all of these strategies that the day traders have, they are just predictions, right? Still, nobody knows if it's going to go up or down, but they make predictions and they make setups to put things into their favor. Kind of like casinos. Casinos know that when they deal you blackjack, every once in a while they are going to lose a big hand. But if they have a strategy set up and put into place over time, they can be a consistent winner. The same goes for day trading. And looking back over the last 3 months, there was a lot of times that I thought I was using a strategy, but I was really just gambling. Right? I did not have proper setups. I did not have a proper strategy, and that's okay. And that's why a lot of day traders lose in the beginning, because it does take screen time and it does take experience to develop that strategy. And I guess that like is a follow-up. Maybe this is a tip number 1A. Find something that works for you and stick to it. I heard somebody say in a live stream once that's like, you could be day trading for 5 years, but if you switch your strategy up every month, you're really still a beginner. Right? You have to find what works for you as soon as you find things that you're comfortable with and stick with that one strategy. Finding one strategy really, really helped me be successful as the 3 months went on. And I guess a part of that setup is my second tip. And that's really that indicators are just noise. When I first got involved with this, I started reading articles and engulfing myself with as much information as I could. Finding MACD strategies, RSI, moving averages, and my chart looked like a typical meme chart. And then what I realized is that most of the professional day traders, they really have nothing on their screen. Most of them are trading price action and volume, maybe VWAP here and there, but they have certain setups that are right there on the chart. They don't use indicators. They don't look for a magic ticket. There really is none. And when I took all of those indicators away, I'm like, oh man, like I look like I'm just like, how am I supposed to read anything from this chart, these candles with no indicators to tell me? But then once I got rid of them, now when I turn them on or I see another screen with it, I understand the noise, right? Because when you have your setup, you're going to be thinking, I have a certain entry that I want to enter and a certain exit. Well, when you have a MACD and you're waiting for a MACD cross, and then you're looking at RSI, and now maybe the MACD doesn't fit with the RSI. Now you start playing games with your head. It becomes a lot harder, right? You can look at your MACD and your RSI, but now your EMA doesn't work or your moving average doesn't work, and now you're not in a trade. it really is just noise. And that's not to say that like people aren't successful with MACD and RSI and all these other indicators. I'm just saying for me, I like things simple, right? And I like volume and price action, which is why I like to use VWAP. But other than that, getting rid of indicators actually helped me. I entered less trades because I was really focused. That was one good thing, because I wasn't waiting on something to tell me to trade. I was waiting on my own plan. So if you're struggling in the beginning and you have all these indicators up, maybe not like get rid of all of them at once, but start to limit down your indicators to try and get to simple things, just like volume and VWAP and maybe some sort of moving average that you feel comfortable with. The third thing I learned was to narrow down my watch list. My watch list had tons of stocks in it. I pretty much had every meme stock that I've ever read. And then I had some of my favorites, and then I had some of my Discord's favorites, and I had like a 20 stock list. And I realized that that was a lot to keep track of. And over pretty much the month of February, I started narrowing it down. By the time I got to March, I am now just trading the S&P 500, the SPY, and the Q, right, the NASDAQ. Those are the only two things that I look at. Every once in a while, if I want to trade some news, if I hear about some news, I'll maybe look, but that happens very few and far between, and I love it. It took me about 3 weeks to really understand how the NASDAQ moves with that price action and that volume that I talked about, and now I can kind of look at a NASDAQ chart and get a pretty good understanding of what's going to be happening. But you can't take what's happening with the NASDAQ chart and your understanding of it and then apply it to another stock. You really need that screen time to be watching stocks and understand how it moves. How many dollars does it move? How fast does it move? Things like that, and narrowing down and just worrying about one or two indexes. And it doesn't have to be an index for you. Maybe you want to just focus it down to 2 or 3 stocks. I'm telling you, it really, really helped my success to be able to narrow that down and really, really focus, because day trading is not gambling if you want to actually understand it. You have to understand exactly what's going on, and I think narrowing it down, that makes things just a lot easier. The fourth thing is kind of cliche, but it's so true. It is like, I read so much things, and this was the one thing I really skipped over and over again, and that's that you could always re-enter a trade. You have to have a stop loss. You have to be able to get out. And the times that I've gotten burned, and it's still happening even now in this month, I'm still getting burned. The people in my Discord know about it, where you let it go, you have a stop, you let it go below because you think it's going to bounce back. Whenever you start to think. Whenever you hear the word think in your mind, get out, right? This should not be a think. This should be a, this follows my setup or it doesn't, right? Because people ask, like, where do you put your stop loss? I put my stop loss right where I think that my plan isn't going to plan. It's not a profit amount. It's not a percentage amount. It's a chart. I read the charts. I don't even have my profit and loss up while the trade is open. I'm strictly watching the chart. And that's, you have to have that stop loss, because once it breaks below and you start thinking, then it keeps going down. You keep thinking, then it keeps going down, and now you've lost so much that you got to stay in it, and boom, it's over. It just becomes really, really hard. And then so many people, they'll set their stop loss far, but they'll take profit really small. So you can have 25 really good small wins and then 1 loss, and you lose it all. That's essentially what's been happening to me over the last 3 months. I'll have very, very consistent green, and then 1 big red blow up. And once I started avoiding that 1 big blow up and knowing that I can get a quick stop loss, lose $25, $30 or whatever, keep watching, and even if I was right, I can re-enter, make up that $10 or $20, or I was really wrong and it was a good thing that I got out. Practice like stopping out almost a little too early. Set your stops tight, and then as you get comfortable with getting stopped out, you can maybe raise that stop a little bit more as you become more comfortable. But I would say if you're just starting out, a stop less than you think it is going to save you so much more than a stop more than you think it is. This is all about survival. You want to be able to survive till tomorrow for the next great trade. And if you have bad stop losses, your account is going to get crushed. You'll see in just a second how much mine did. The last thing I learned kind of coincides with a video that I made, I think 2 videos, like learn this today or something. You can go back and check out the video, or maybe I'll link it at the end or in the comments. But it's that percent of return on your investment is way more important than your dollar amount return. And this is something I see a lot of small accounts dealing with, and something that I dealt with as well. When you go online or when you're here on YouTube and you're watching people day trade, all you're seeing is these huge returns.
$500 scalping Tesla in 2 minutes. I made $1 to 1,000. Like,
all you see is that, and you think that every trade has to make you hundreds of dollars, right? But if you have a small account, it's borderline impossible to do that, right? We want to be consistent. Depending on your account size, 2% of your account may not be any amount of money that's worth bragging about. But if you compound that over time, this is, something that I really had to think about. Because right now with my portfolio, and I talked about it in that video, I'm really shooting for $8 to $10 per day. And you're like, that sounds crappy. But that's 0.2% of my portfolio for the rest of the year, which equates to 50% returns. And I did a poll on this main channel here. If I were to return 50%, you'd consider me a really, really good trader. 0.02%. So switch your mindset. Don't be worried about like needing to post that you made hundreds of dollars, because would you step over $5 bill every single day if you saw it? No, right? So take your $5, take your $6, take your $10, get the hell out of there, come back tomorrow. And I challenge you, like people say in the Discord, like, oh, it's only $5. And I say, I challenge you, make $5 every single day this month. Because if you could do that, you will be a great day trader. All right, so don't worry about how much money you're making. Think about the return on your portfolio. You can use that for risk. I try not to risk any more than 2%. Deal in percentages, because then you can keep things in perspective. And question YouTubers or people or your friends that tell you like, I made $1,000 today. Well, how much did you invest? Because if you put up $1 million to win 1,000, I don't know, is that great? But if you put up 100 and won 1,000, that's really good. So it's all about perspective. So now as I bring up my results and just give you that dollar amount, I'll tell you, I gotta be honest. It takes a ton of screen time to learn. The more I learn, the more comfortable I'm getting. Definitely is going to take time. You can't just step into this. You can get lucky and gamble, and you can make millions of dollars in your first week day trading, but I don't know how long you're gonna be able to hold on to it. It definitely takes time. It's definitely not passive. If you hear day trading, passive income, red flag. Get the hell out of there. That person's gambling. Don't take anybody's word for it unless they've been doing it for months and months and months. And emotionally, you have to be able to handle the big swings. You have to be able to take a loss. And that's one thing that like, I could take a loss, but I don't know if I want to. At my age, I don't know. That's like the one thing that's really pushing me maybe away from day trading long-term in the future. I love the charting. I love everything else about it except for the swings. At my point in life, I don't see any point in losing money for a bigger risk when I'm already financially independent. I don't really necessarily need to make more money, and I want it to be fun. And sometimes the swings just make it not fun for me. All right, guys, so here's my P&L calendar. Guys, I trade on Webull. I freaking love Webull. They're always giving away stocks. I really trade on it because I love it. But I'm not going to push like the get your free stocks. They're down there. You know the deal. But I love trading on Webull. Here it is. This is actually April. So April not going so great. We can see in the 4th and the 5th had a little bit of a blow up. I was mentioning I have a bunch of green days and then a blow up. I think the 31st of March wasn't a blow up. I think I just had a bad day that day. Got stopped out a couple times. My stops are usually between $25 and $50. So that's probably like 2 stops. The 5th and the 6th was a blow up. That was one trade, that 460 and that 185. That was all, like that was 3 contracts. I shouldn't have been trading that size. Maybe that's another thing I should have mentioned, guys. Size is very, very big. I guess that goes with like the percentage, but I've gone down to just 1 contract when I was trying to do other contracts. But this is like the update now. And I'm going to keep updating it on my other channel, Bradfin Day Trades. So if you want like just day trading content, because I'm not going to post my day trading content here. If you want to do that, go check out Bradfin Day Trades, and I post live over there, things like that. January came out, got smacked. February got smacked harder. Now, I think really what happened in February is that I started over. I reset. January, I was gambling. I was using indicators, things like that. February is really my first month. I switched over to trading supply and demand, trading just the NASDAQ and the S&P 500, and that was really my learning time. So then you see in March, I almost made $600, a nice bounce back. And that was from my education that I learned in February. And you're like, Brad, well, if you learned all that education, how are you down another $644 in April? Like I said, I had a blow up. right? This right here, this 460 and this 185, that really shot me in the foot for April, but I got to bounce back, right? And that's kind of the swings that I don't know about. Like, can I handle being down $600 to try and I'm not trying to get back to even, but like I was down in March. You guys seen the video on the channel here. I was down almost $600 in March and turned that around. I just wonder if I'm able to do that. So in the last 3 months, guys, I have a realized loss of $7,948. This portfolio started about $10,000. $10,000 was the amount of money I knew that I could risk and that I could lose it all. And I know that's a lot of money for some people, but this was, for me, was an education, right? I figured it was market tuition. I figured that I would learn a couple things. And then if anything, $10,000 to me for a life experience and education, that's worth it to me. Sometimes people don't like to pay for education. I will. $10,000 is what I was willing to pay. I am going to try and go to at least 6 months. So when we get to 6 months, I go to summer break. If I have a couple $100 in here, a couple $1,000 in here, that might be it. But stick around and I'll give you that update. So yeah, I'm down a lot, guys. I'm down almost $7,000, and that's okay. That's okay. But that's what I learned, guys. I hope you got some value. If you did, consider subscribing to the channel, give it a thumbs up, and I'll catch you on the next video.